Okay, next we are going to take a look at the objection of company selection. So when it comes to a whole life insurance policy, and I'm in the market for maximum cash value, flexibility, all that good stuff I always hear about, how do I make sure that I select the proper company? So when it comes to insurance company selection, there are a lot of insurance companies out there. You do not need me to tell you that. But we can just turn the TV on, the radio on, an advertisement pops up and we see 10,000 different insurance companies. Not quite 10,000. When it comes to maximum cash value life insurance policies, every single time I'll always recommend the big four, or four major mutual companies, being MassMutual, Guardian, New York Life, and Northwestern Mutual. And the simple reason why is when you look at actual policies that have lived the test of time, not illustrations, not who projects the best numbers, but real policies that have lived the test of time, we have consistently found that the internal rates of return on cash values with these four companies have produced. Not to say other companies are bad one bit. A lot of companies have great business philosophies. I see them growing and getting to that same level, but we've seen it consistently from these carriers. Now, as we get into details on these companies, what you will find is their size. All of them are massive. When you look at their financial ratings, cream of the crop. AAA rated, 98 to 100 on the Comdex scale, which is as high as it gets. Very, very strong from a financial rating standpoint, but again, actual performance, because the biggest issue that pops up when it comes to whole life insurance in the industry where buyer's remorse comes into play is an individual buys a policy, they see the illustration, they think it's going to produce that, or they're told it's going to produce that, and then it doesn't pan out. It under-delivers. The cash value just performs poorly when they bought it for cash value purposes, and then they make a phone call to Uncle Dave Ramsey, or a financial advisor, talks to them about whole life that is against it and just beats it up because it makes it very easy to beat it up. The policy just hasn't performed. Where we see that to be the case in the least number of scenarios is with the major mutual companies, specifically when the policy is designed properly. That is a must. When I say policy design, so we've got over here properly designed, where can my money go in a life insurance policy? I can pay it toward the premium, which does not build initial cash value, or I can pay it toward the PUA rider, which immediately builds cash value, guaranteed and non-guaranteed. So a properly designed policy often entails minimizing that premium as low as we can based on the IRS limitations. That specifically has to do with my MEC limit. And then two, based on the insurance company limitations. How low can you go? That's the name of the question. What you'll find with these major mutual companies, often we can go about as low as that 1090 design. 10% of my total desired maximum payment can go toward premium. Now, to be very transparent here, some companies will allow you to go a bit lower. Some don't allow you to go as low as 10%. Depends on the insurance carrier and their preference. But what you'll find if you're looking at maximum cash value policies with any of those companies, you can often drive that premium very low and close to 10% with most of those carriers. The product selection will have an impact if you're able to go that low or not. Their dividend rates for 2021 are as follows. MassMutual, 6%. Guardian, 5.65%. New York Life, 5.8%. And Northwestern Mutual at 5% flat. Now, here's one thing I want to touch on in respect to dividends with these four companies or any company out there. I would not recommend purchasing a policy based on who has the highest dividend rate or who projects the best numbers on paper. Because if I look at these companies right now, Northwestern is at the bottom of the pack. However, I know with full certainty that they have always delivered and will continue to deliver when you look at them as a company, their investment philosophy, policies we've seen over time. And I can even sell Northwestern Mutual. They're a company that only works with career agents, but that stellar performance is there. We've seen it consistent when the policies are designed properly. So my point to mentioning that is we don't want to get too hung up, I try not to do this personally, on the illustrated dividend rate. Because if I'm paying money into a policy, let's assume I'm paying in $100,000 per year for any amount of years, maybe it's 5 years, maybe it's till age 65, we customize it, and I've got the policy set up in an identical fashion with each of these companies. Not joking at all. I can close my eyes, pick one of them out of a hat, and I can't go wrong with any of them. We've seen them all go back and forth over time, all stellar in terms of actual performance. Now, what will help one refine their decision-making process is often flexibility. And we talk about this quite a bit. So specifically what I mean here is, how do I use a life insurance policy, which typically I think bill premium, I pay the same amount every month, every year, and turn it into a flexible savings asset. Where some companies are very stringent with their payments, but some companies, if I have this $100,000 per year, if I want the ability to pay that much in, I can literally commit to a $10,000 minimum premium and then have the ability to add PUAs at leisure up to $100,000 per year, another $90K in PUA. So you can design it to be very flexible. I'm not committed to that. So to hit on the objection we hear, because that's the purpose of this series, is often we hear that you should consider a small to medium-sized company when considering a high cash value life insurance policy. And my immediate question when I hear that is, okay, why? Why would that objection come up? Like, if there's a good reason for it, A-okay. But a small to medium-sized company, if I do not see any track record of actual delivery, actual performance, no proof of concept, and I do with the big guys, like, I want my money in a policy that is actually going to deliver. I was talking to an individual recently, very sharp, does extremely well for himself, has a high net worth, and he's considering a policy. He was putting in around the mid 6 figures per year is what he's looking to allocate towards a high cash value policy. And he was pitched on a smaller insurance carrier that is well rated, but they're a smaller company when you look at them overall, and there's been no proof of actual performance, nothing disclosed other than their dividend history, which I don't care about that. I want actual data. And his comment when that policy or that company was proposed to him from a different company, not us, was, there's no possible way I'm flowing this amount of money, the amount of money he's considering, through that company. I want one of the top companies. No, let me rephrase. I want one of the best mutual companies that I'm going to consider this cash value life insurance policy with. And he considered one of the top mutual companies, same company I use actually. So with that said, flexibility will help refine one's decision-making process. We at our company primarily use those. Sometimes we do consider these guys as we can. Northwestern, as I stated before, we cannot because we're independent brokers. However, we can always make an introduction if someone is very big on wanting Northwestern Mutual. But again, cannot go wrong with the performance at all. From a flexibility standpoint, these two have a lot of it. And I would actually encourage you to view our All About MassMutual or All About Guardian videos for more information there. So in the other pieces over here to your right, properly designed has to be designed right. If it's not, that's where we can see the policy not deliver regardless of the insurance company. Actual performance. This is what I like so much, and which is like trying to find a needle in a haystack in the industry. Because just to find policies that have lived the test of time is so difficult. That's why we've had to do so many independent studies of our own. Not an illustration comparison. I do not want that. Who do these guys use? I should put wealthy in there as well, because there is a consistency here. You will see these major mutual carriers utilized. In fact, let's take a look at a bank-owned life insurance policy. Granted, bank-owned life insurance does function differently than what individuals can obtain, but we can mimic it as closely as possible. What I want to touch on here, this was a BOLI policy we put in force in March actually. Look at the company selection. Smaller deposit. When I say smaller deposit relative to what banks typically pay in, I don't want to sound like 10 million, hey, small, no problem. 10 million goes in, combined cash value, the 10.23 and change. There's the death benefit on the 30 officers. So what banks and corporations do, they actually deliver these policies in these companies. That's why. So that's a good example. Let's also look at this very briefly. So if we look at some history here, because we're so big on that, here's a policy of Guardian that was issued. We put this in force in 2014. He's in policy year 6. We see he's well north of his break-even point already. Crossed it right around year 4. If you design it properly, typically you'll see a policy break-even between years 3 and 4. But again, actual performance moving forward. Policy was issued in 2014. We want to see not just the dividend, because here's the dividend assumption over time, but what is the actual internal rate of return as the years pass. He's right at that 4.2% for a safe, liquid, tax-free area to position money. If we look at a Mass Mutual policy, that's an older one actually, that performed very nicely, but I don't like looking at these old ones because it lived through the 80s. And look at these dividend rates over here. It's kind of unfair to say, hey, look at these great shiny numbers that happened before Steve Parisi was even born. Well, right around when he was born in 88. It's not realistic for today. Let's look at a more recent example here. So a policy that was issued in 2015. This is one we put in force. What he's actually paying in, year 5, he deposited a total of $578. And his actual cash value was $596. Average IRR, annual IRR. We pulled this straight from the in-force illustration. Cash value increase over time, the net growth. Same thing with New York Life when we look at this guy. Here's a policy that was issued in 2003. 17-year average internal rate of return when we looked at what he actually paid in over time relative to what he actually has in cash value, 4.07%. Same thing happened. And then we ran the projections moving forward based on the guaranteed values, midpoint dividend, and 2020 dividend rate. 2021, this will change a little bit because they came down to the 5.8%. Point here is performance. Every time we've looked at smaller carriers to obtain the same information, it's not performed. I haven't seen smaller carriers deliver over a 4% IRR for any period of time yet. One company I will say we're working with quite extensively and they're actively looking for data. I do think they will find it. They're the only company that actively has been working for it. And once they do that, I'll certainly go into information and disclose them. But so far, what we've had and what we've seen just to be consistent, that solid performance over time, right? If you're playing a game and you're gonna get a first down every single time, you know it's gonna be there. Keep on moving. And I want reassurance that I'm set up with a top carrier because this is my safe money. I know it's going to be there over time. Here's what we've seen in terms of actual performance. Nothing against small to medium sized companies, but again, gotta have the proof. That's how we are. A lot of insurance companies are likely very annoyed with me because I always go back to that, but that's what we need to see before we start promoting and recommending insurance carriers. Actual performance. Hope you enjoyed this one. I always like talking about this stuff. If you have any questions, reach out, and as always, I hope this helps. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.